Hey guys, this is Andrew Keene from KeeneOnTheMarket.com. As you guys know, we're trying to increase our VIX commentary and analysis. So back here with my good friend Matt Shapiro. Good to see you again.
Thanks,
and
Andrew.
He's going to give us a daily and weekly recap of what happened in the VIX.
Well, you know, Andrew, down on the VIX floor, it is a day-to-day battle of survival, and we had that exactly this week. Earlier in the week, the VIX cash was down to what, 18 or so?
Yeah, I think so.
And the front month is going to expire this coming Wednesday, so that 18 straddle was about $1.65 at the time, and the futures just weren't moving. But so far this year, the paper, those professional traders that need to hedge their books, many of them coming out of Europe, have bought millions of options in the VIX. So they just weren't believing the position of this market. They were looking for a reversal, and they finally got it on Friday with really a super spike in volatility and the futures.
When you talk about paper or you talk about the customer, give me an example of who like the big hedge funds or the traders out there are you're trading against.
For the most part, the biggest customers in the VIX are major European banks trying to hedge the risk they have on their books. So what they do is they might buy a large strangle and say the second and third months just to get that premium on their books in case something happens in the marketplace. As well, there are many speculative banks that will buy 10, 20, 30,000 options in the VIX just in case there's a spike and a downdraft in the market like we had on Friday.
And also please explain expiration, because I've been trading equity options. I've never actually traded the VIX or been in the VIX pit. Equity options, expire every Friday for the weeklies, and then we have February expiration this Friday at 3:15. So why don't you tell everybody when the VIX actually expires?
Well, the VIX expires, the futures do, on the Wednesday morning before the S&P 500 does. So the final day to trade VIX options and futures is this coming Tuesday, and then there's the gamble of the print Wednesday morning.
So then you have an overnight risk if any news come out of Europe that you can't trade the futures at all because they close at 7 p.m. at night and then they open at 6 o'clock in the morning. Does that sound about right?
The futures close along with the options at 3:15 Chicago time, and what happens is at the end of the day you look at what you got on, and then overnight you see what's going to happen. That print is what happens with the paper in the S&P 500 that next morning. If they crush the print, they could come in and sell thousands and thousands of S&P options and drop that cash down. That's where the future will settle. Or they can bid the print up at the same time and buy thousands of S&P options.
This is Andrew Keene from Keene on the Market with Matt Shapiro, and that's going to be your VIX commentary and analysis for the week of February 10th, 2012.